What's up, guys? Welcome to another video of financial statement analysis. I just want to check the second company. Yesterday, I'd done a company called Nell, and today I'll be doing another company. Um, so we're gonna go into that. Let me just go on to search. Then I need to go on to browse all Germany energy, and the name of this company is called Senvion. Just looking straight away at the chart, it doesn't look like it moves very much. That's why the lines are so rigid. So, and just looking at the long-term performance, it doesn't seem to have performed very well. Usually, companies that don't perform very well in terms of the stock price over the long term have very large dividend yields. But over here, you can see that the dividend yield isn't showing. So, and usually when the dividend yield isn't shown, as I said in my previous video, is if the stock price fluctuates very rapidly. Um, as you can see, I've invested £2 and eight, or more than £3, and it's gone down by just over 30%, which isn't very good. Especially considering I didn't invest that money too long ago. The P ratio is missing also because, as I said earlier, when the stock price fluctuates very rapidly, the PE ratio and the dividend yield isn't available immediately. As you can see, the beta is 6.27, which is over 600% of the average beta, which means it's more than 6 times more volatile than the average stock. Or another way of conceptualizing it is it's more than 6 times the price changes 6 times more rapidly than the market average. So if you look at the income statement, says the profit margin for 2017 is minus 4.92, which is not very good. It means it's made a negative profit, which means after all expenses had been paid, the expenses came up to 92.92 million euros more than what the company had made in sales. And also the income statement has only shown 2017's numbers. It doesn't show any previous or future income statement numbers, and we're in the year 2021. So this is a 4-year-old statement, which is very, very bad. This is probably the worst I've ever seen. Same with the balance sheet and the cash flow statement. The company pretty much lost money out in all three different categories with regards to cash flow. The debt to asset ratio is extremely high. It's almost 90%, which means interest charges will be very, very high also. There isn't very much to look at, but with regards to this company, I would say is generally not. It's probably the worst. Has probably the worst financials I've seen out of any company. Probably the only positive is it has a lot of employees, which suggests the company is very big. But then if you look at the market cap, it's 1.83 million, which is also probably one of the smallest companies I've ever seen listed on any stock market. So that is extremely bad. If you look at the ratio of market cap to employee ratio, if you divide market cap, if we go into the calculator, if we go to calculator, we do market cap 1.83 million, 1.83 million, 123 divided by 4,100, 4,100 equals, so the market cap divided by the employee number ratio is about 44,000, which means for each employee the company has 44,634 euros, which means, and how much do you think the employees earn per year? About 20k on average, 25k. So which means the company won't even be, well, market cap isn't necessarily how much money the company has, but it's close to that. But let's just take it as that the market cap is how much money the company has. That means the company has less than 2 years worth of cash or value per employee, which means the company probably doesn't have a very bright future. So that's a very quick analysis for this company. Have you guys enjoyed it? And I'll see you in the next one.